Well, thank you for staying with us. Away from cosmetics now, for real. Amidst the backdrop of global macroeconomic instability and the proliferation of illicit activities in the market, Nigerian capital markets successfully pulled through, with the stock market being ranked among the best performing in the first half of 2022. Despite uncertainties in Nigeria's economy, such as political risk, inaccessibility of foreign exchange, challenging operating environment, and other global trends that have resulted in an unprecedented exit of foreign portfolio investors in the capital market. Domestic investors trading activities in the market as of June 2022 recorded a transaction worth 1.4 trillion naira, while international investors trading activities was pegged at 243.5 billion naira. Well, I introduced him earlier. He's joining me virtually to take a look at all of this and, of course, some activities across the globe. He's a financial analyst, stockbroker, Mr. Mukhtar Mohammed. Thank you so much. It's good to see you.
It's a pleasure to be on your program too, Lulokwe.
Thank you very much. It's always nice to have you too. Now, let's start this way. The market has been bearish for some time, and it's looking like it's something that we'll stay with for some time. First, what is your overview of activities at the exchange? Do you think that anything could happen soon that could change the hands of time, if I'm allowed to use that?
Well, so you said it all. If you look at economic reality based on what we have on ground, you won't see anything that could change the times as it is now. But you must know that the market can change in a split seconds. A policy comes, a trigger comes, and we swing the other way. You made mention of a lot of issues that have hindered the continuous bullish runs of the market, and one of those issues is the issue that have to do with FX attracting foreign portfolio investment, which has been the key drivers of Nigerian market, especially long-term bullish runs. So we've not seen that, and we are not thinking that issue will be addressed anytime soon. By and by, the global economic crisis that is being experienced in all other markets all over the world. So definitely, when you look at that, you said it doesn't look good coming to the end. But again, you need to look at the resilience of the Nigerian economy, especially the Nigerian companies that are listed in the exchange. They've come up with good numbers in the second quarters. We expect them to come up with good numbers in the third quarter. Those results will start coming in now. And so when you look at that, by and by, the values of our equities, by and by, the profit they are making, looking at their PE ratio, looking at their dividend yield, looking at their dividend per share, then you know that they are still very undervalued in terms of price. And so whatever we've seen now is based on investors' perception of some of these equities, and that could change. You know, a lot of things drive the market. Sometimes monetary policy, sometimes fiscal policy, sometimes good result. But mostly what drives the market is investors' perception of the market. How are we perceiving the market to perform? What do we think will happen? Definitely is the key driver of that market. But now, as it stands now, that perception is very low. Even if you look at liquidity that has come into that market, has been good. Because when you look at the earnings from some of these equities, the banks, what they've been able to pay in terms of interim dividends, you could say it has been good. But the response from the market has not been very, very positive, especially from investors.
From what's also happening in the UK, then back to our country here, we see that the Bank of England at the moment is intervening in the market to halt economic crisis. What do you make of this? Why are we not doing same over here?
Well, you know why we're not doing same? Because whatever gain the market have seen or whatever the economy have gained was because of the monetary policy. The physical side has not been there, and physical side have to do with governance intervening in the market. We've not seen the intervention for the past. We're not talking about the past 8 years. We've been talking about the past 16 years. The last time we have an intervention in the market was during the administration of President Olusegun Obasanjo, and it was not even a direct intervention. It was an intervention that came in the form of giving tax holidays. I think also that also spread into the presidency of Goodluck Ebele Jonathan also. So after that, we've not seen any intervention in the market, and no economic growth. I keep saying that the parameter of growing the growth of your economy is your equity, your stock market, your exchange. That's the barometer to know how your economy is growing. But as it stands, the government have not been interested in the Nigerian stock market, seems not to care about what happens there because they have other things. They think they have other pressing issues. But they're forgotten to realize that if you begin to make the stock market attractive, what you are dying for foreign portfolio investors, foreign direct investors will come into this country. We may not have seen the kind of exchange rate volatility we are seeing. For now, I don't think the physical side has so much problem. They are looking at their debt profile, they are looking at their revenue, they are looking at infrastructure. Even the monetary committee policy have not looked at the equity market as it stands because they are battling how can we come back, inflation, how can we bring stability in the exchange rate. So the market is an orphan as it stands now, and it doesn't seem there will be any remedy for the market anytime soon. So, but with the UK, you realize that the government have to do that because, again, the government is looking at this market is a barometer towards our economy, and most of the big companies are in this market. How do we intervene to bring stability into those markets? And the physical side is saying, look, the monetary policy must have a high rate. How do we help? How do we try to get our own UK citizens to take ownership of the market? So what the UK government is doing now is trying to say, look, the opportunity will come because the market is going to be down. How do we help our people to become ownership of this company so that they partake of the largesse that will come up in the future? Because the equity market is not a straight graph. Like I always say, it goes up, it comes down. But when it is down, that's when the opportunity is there for people to take. And the UK is looking at that and saying, look, we could help our people to begin to take those opportunities. I think that is why they are trying to intervene.
You're of course, an expert in this space. So at the moment, if you're to advise an investor, what sectors are you going to focus on? Because many will say there's also always an opportunity in the market. That's on one side. Then on the other side, many will say that foreign investors are actually leaving the market, particularly uncertainties ahead of elections and all of that. Everyone wants to sit on the fence and see what is happening. What is happening in Nigeria before I put my money there? And the domestic investors are taking charge. Do you think they can sustain taking charge of this market? I mean, the domestic investors.
They have tried. They have really, really tried. I've been impressed by the pension fund administrators. I mean, the institutional investors, they've really tried to maintain the kind of, we are the best performing market up to date, even despite the challenges that we are going through. Now, let's come back. Election is coming, there will be capital flight. But what flight could be worse than what they've done? They've moved about 600 billion out of this market as it stands. And the market is still standing and is still in the positive terrain. So definitely, he that is down, fear no fall. Now, what's my advice is that election will come and go. We pass through this cycle and it always comes. And this is the cycle of opportunities. Because definitely, why it happens like that? Because governors take the back seat. In an election year in Nigeria, governors normally take the back seat. So definitely, that's the major challenge that we have as a country. Because governors take the back seat, then we are not able to see any policy that would drive the market. So it's always like that. But now again, when the campaign starts, we might start seeing a little bit of slow movement, but not knowing where the market will tilt to. But immediately we begin to get to the election year, when we have those permutations, we see where the market is going to tilt to, then we begin to experience some little bullish one. Now, let me tell you what I'm happy about this time about the market. The three major presidential aspirants are going to do well in the economy. I can say it anywhere. They are going to focus on the economy. They have the pedigree to turn around the Nigerian economy. You talk of the APC presidential candidate, you talk of the PDP presidential candidate, you talk about the Labour Party presidential candidate. They have the connection, they know the people, they know what to do to turn around the market. And they are also experienced. They have been businessmen, and I think they will do well. Now, coming back to that, and once that time begin to trade here, when we have a peaceful election, always to look at the first place you see the response to the peaceful election is the stock market. We see those rally. Then, if we have good economic policies, those rally will continue, and at that time, the foreign investors will be looking forward to coming to the market. So it's a good time for the local investors to look at the market, especially with the violation of these prices that are bargain hunting. Now, if you come to your first question, which I'm going to answer last now, where will I be looking at as an investor? Number one, when they want to be a recovery in the market, the first place that will partake of the recovery is the financial stocks. And when you're looking at the financial stock, you're looking at the tier one banks. This seems to be one of the most stable, even on up till now, despite the challenges of the market, they are still giving us a lot of liquidity. Interim dividend from UBA, interim dividend for Gitco, interim dividend from Zenith Bank, interim dividend from Access Corporation. So those, they are still there and giving us those values. And in terms of price valuation, they are very low. So you get a more dividend yield. A report came out this morning that said that the stock market have aged against inflation for the past 3 years. It has gone above inflation. So definitely, if you want to think of where to beat inflation, then you need to think of the stock market. Like then we'll go to the conglomerate sector. You know why I call conglomerate sector? Because of the infrastructural decay that we are suffering in this country. They will continue to become the toast of Nigerian government towards doing 1 or 2 projects. So definitely that is a space to look at. Then you look at the brewery sector. I mean, definitely it's an election year. Definitely those sectors tend to benefit very well from the election. But one sector I would tell the investors to be wary of is the consumer space, because a lot of Nigerians are reducing their household item because of lack of of liquidity to begin to buy some of those items. So those, and the high cost of production, inflation, exchange rate volatility. So the consumer space, what I mean that is the manufacturing sector, will tend to be a slowdown. But for long-term investors, it might be a place to play. Then the place to play for if you're an investor that apathy for risk, and you take risks very well, you're ready to play the market for the short term, you don't mind the volatility in the insurance sector because there's still penny stocks that you can gain more. The oil sector is not to be left out, especially when you look at Seplat, what they are doing, and that for me, and Total, Total just listed only their marketing arm. And we know that any moment from now, there could be a policy change that will tilt towards helping most of these marketing arm companies, which might be the removal of subsidy. If that comes, both Seplat will benefit, Owanda will benefit, and Total also will benefit. So for me, you look at the banking sector, what I mean that the financial sector, if you are somebody that wants to take high risks and volatility, you look at the insurance sector. Don't take your eyes off the conglomerate sector. Don't take your eyes off the communication sector, especially MTN. Especially now that we know that we will be having a lot of people on the social media, a lot of data, a lot of phone calls during this election year. That is one stock to look forward to.
Interesting stuff there. Mukhtar, thanks for that deep insight into activities there. Any fear? Okay, particularly, let me go this way before I go to that. Many are worried, or some investors are worried, and already even attacking the NGX, saying that there's not been investment returns after the demutualization of the exchange. Immediately after the demutualization, would you say that we've had more positives in regards to the market than what we had before now?
Well, I mean, this will not being fair to them, because if you look at the listing price, it was listed at 15 naira, it went as high as 28, 25 naira. That is the exchange itself. And then they brought a lot of corporate governance into the exchange. The exchange is attracting a lot of, during the diminution period, that's when we got MTN coming to the market. So you cannot say that of them. I think they have done well in terms of that. And meanwhile, this is not up to 2 years that they've done this. Definitely, like I always say to you, the market is a marathon, it's not a sprint. So definitely, if you are there, just wait for them. I think they are evolving. They are bringing a lot of product. They are trying to revive I'm trying to remember the time the other side of the market. I'm trying to remember that sector that they are trying to bring up again. So they are the consumer. I mean, it's not the consumer. They are I've forgotten it. They are trying to work on a lot of things that they are trying to work in, and so we need to give them time to come up with those products. And the commodity market, they are trying to
the commodities
make sure
exchange
that
you want
they
to mention,
expand the
right?
commodity market. The commodity exchange, and it's going to be under them. So they are trying to do all that. So we need to give them time to do that, and I'm sure they're going to come up. To say they've not gotten value since the demutualization, I don't think is right. They paid dividend to their investors. They are still doing very well. Their price that is stand now is still not at the listing price, even if you say it's not as high as it was listed before. But there's still a lot of value in that, especially if they are able to attract listing, mostly multinational to listing. in the exchange. I think it will all go well for them. Now they are trying to do a lot because they were not like that before. It's just like you move from a government parastatal and you're now becoming independent. There's a lot of challenges that you have to encounter before you get your feet down. I think for me that is what I feel about them.
All right, indeed. We talked earlier about the British pound sinking, and we know what's also happening with regards to the dollar and the naira. At the moment, the naira trading at the other market for more than 700 naira, and that is really worrisome. Now, are you bothered, or how worried are you with regards to the prediction that there might be a global recession, and how would that affect markets globally?
There is already a global recession. We are just trying to. We are just trying to.
We are in technically, we might be.
We are in a global recession. British pounds, 50 years low to the dollar. Chinese yuan, 25 years low to the dollar. Euro also suffering its batches, left, center, and right. Energy crisis. So there's a lot of things that I think is a big challenge to them, that the market is already, the world is already in a recession. When you look at the dollar seems to be the only one that is benefiting at the moment. And why is that? It's because the physical side are doing a lot for their citizens. They are trying to embed, they are trying to directly impact them by giving them a lot of soft landing, especially in the area of basic amenities, by paying direct cashes into any family that is earning less than $50,000 in a year to help them for the next 3 months. So that is also helping their market. And they are with that, they are including a little bit of liquidity into the system. For the British, the challenge of the British market now has to do with the physical side. The monetary side have done what they ought to do, raise the rates, and the physical side is saying, look, if we allow it to be like that, the market will suffer, and also the citizens will suffer. So they cut tax. And why the market reacting negatively to that is because the British economy is driven by tax. And now you're going to have a tax cut for a lot of companies, and you keep saying that the more tax cut will come in. So the market panic over that, and that says, okay, and already technically the British think they're already in a recession. So that is what is causing fear about them. For the naira to look by, is that a true value of the naira? You and I know that what is happening in the Nigerian market, in the other market, is all about speculation. And that was why the CBN came up with a big axe on them. And every day, the actions of this market keep justifying what the CBN has done. The only challenge I have with the CBN policy, asking them, is that you have not created another market that could be more seamless, competition with them, which investors that used to patronize this other parallel market, this other market, would have been able to patronize this other market that is being driven by policies and direction, and by the CBN, and they will begin to get. So that's what is happening, because, and again, CBN have not been able to meet legitimate demands, even from the manufacturing sector. We've heard it said it over in your program about things like that. So Tolu, for me, as it stands now, the naira is currently overpriced because of speculation. But again, would have been saying the positive, because you know what I always say, an election year is always a year that you see the exchange rate go down. But unfortunately, I don't think we will see that happen this election year, because it seems to be going up first. But maybe we might experience that. But for now, I think it's not looking good for the naira. But it's all about speculation. It's not that's not the true value exchange of the naira. I'm not saying I'm not saying that the import-export window is the true value. But when you compare the difference between the import-export window and the parallel market, which is the Bureau change market, the difference is too wide. And that has been what has affected Nigeria in getting foreign direct investors or portfolio investors coming into the country.
Great stuff. Let's now look at trading for today before we wrap up this conversation. Let's take that opportunity of having you in. But we are still trying to get figures from the trading engines, a lot of activities because of their meetings and all of that. But the market is looking up, ending this week 0.10%. What are you looking at? Is the end of a quarter. By next week, it will be October. We are moving towards that very time. Campaigns and all of that will be at its peak. Money in circulation and all of that. Which angle? Where do you think this will take us? And what's your assessment of the performance of trading for the week?
All of everybody week has been fine. It's not anything unexpected of what has happened. During the week we had markdown. Assets was marked down during the week. Investors got payment from Gitco today. Some of them got payment from UBA yesterday. So there seems to be a little bit of liquidity. So I'm not surprised in what we've seen in the market. And going forward, we'll see some of these activities. Like I said, there's a bargain hunting for investors. So they are looking for entry point and exit point, especially for good equity in the financial sector. I keep saying the financial sector because when there wants to be a slowdown, it starts with the financial sector. And when there will be a recovery, it will definitely start in the financial sectors. You could see the volume from Zenith, you could see the volume from Assets, you could see the volume from UBA. And so those are what are driving. And one financial sector instrument that really come of age is Fidelity Bank. It has come of age, and there are private investors that are looking forward to buy into that equity. So it's an equity that most investors should not take their eyes off. What I might take, there is close period. Some of the companies have started sending letter to the exchange for close period. Like you rightly pointed out, sometime next week, before the end of October, we see those third quarters results start coming in. And the third quarter result is a pointer to what we will get in the final year. And for investors, that could be key in terms of liquidity. You know, in a crush time, in recession, when the economy goes to recession, liquidity is king. And so what I advise investors, go for stocks that are liquid, go for stocks that will pay in a good dividend, and in turn, those liquidity could be the lifesaver into buying some of these stocks again and then enjoying the capital appreciation that is expected. Let me tell you, definitely, economic goes through cycles, the ups and the downs. But what we've seen, if a 1 month of up could erase 2 years of down. So invest well. Like what I tell people, when an economic is in recession, you now do what we call fundamental investment, and you do now value investment. But the key during recession is having value investment. And value investment is all about looking at the fundamentals of those companies, by the price they are selling in, by the expectation that you think they will have through their previous results on what they have done. And if you look at that, there's a lot of value in the Nigerian equity space at the moment. So value investment is key. Don't just invest with companies with good fundamentals. Like I've quoted some of those sectors, and I think investors shouldn't take their eyes off, because it could be one of the best ride they could have. Because anytime you take opportunity, especially during the election year, it tends to turn off for the good after the election. And remember, the election is just in February, so you're looking at 5 months from now.
Well, let's almost finally now. The fixed income space is where many were thinking that one way or the other there was going to be a shift to that angle. I see your smile already from the equities market. How attractive is that space at the moment?
The space is not that attractive as it used to be. You know, that's a space that gave investors 17, 18% before. So it's not that interesting any longer. It's not that attractive anymore, because you're looking at most investors are doing what we call comparative analysis. You look at the dividend yield price in the equity market, by the yield that you get in the fixed income space. And again, with liquidity is really in the system. And so that has not helped the fixed income space until yesterday, during the week that the CBN came up with mopping up of those liquidity. It has not helped this fixed income space. So we're still having dividend yield of 6%, and that has not been able to meet investors' expectation. So that space was the space that we thought would benefit more. But now, the key over that space is that space is actually mostly driven by foreign investors, especially foreign portfolio investors, because of the attractiveness in terms of the yield when they are coming from their own country, by what they will get in our own country. But now that is no more attractive to them, because even in their own developed country, you're talking about America doing an inflation of about 10%. You're talking about UK also doing an inflation of over 10%. And in the dividend yield space here, you cannot get that 10% any longer. It goes over between 6 to 7%. And then you now have the exchange rate volatility of the two-way exchange system, which has not helped them. If they want to repatriate their money, they have to wait a while. So those things were those that have hampered this fixed income space, and those are not things that will be fixed anytime. So that's a very it's not a space that is very attractive at the moment, especially for local investors.
Finally, Mr. Mohammed, so I'll let you go rest for the weekend. What is your outlook with regards to investors' confidence? When do you think that we would have that pre-COVID season, or when are we going to come back fully normal and investors' confidence will return to Nigerian economy. Where year are we looking at? I asked somebody on the aviation industry, was telling me it could be around 2023, 2024. What do you think about the markets?
Too optimistic about the market recovery in 2023. Especially, like I said, the three presidential candidates are going to drive the market with their economic policies. When you look at the economic policies, the only fear I have is it implementable? And I definitely think it's very implementable. They will be very brutal. They could be very brutal economic policies that will come. Number one, I expect anybody that comes to power to make sure that that monster called fuel subsidy is off it. Immediately you have that off it, it will attract a lot of investment into Nigeria. It will attract investment in every sector of the economy. So for me, I think 2023 is going to be a good year for the equity market, because at that time, whichever of the three presidential aspirants that comes in, their focus at the moment is economy. And when there is a recovery in an economic cycle, the first place that benefits, the first economic instrument that benefits is the equity market and the stock market. So definitely 2023, we could see those bullish ones. We could see foreign investors coming into our country again. We could see the exchanges stabilize. But it's still tied to this policy. How soon will the implementation start? And how brutal will there be in terms of the implementation? Like we had in Kenya, you've been sworn in today, and the first thing you do was to remove subsidy. Can we have leaders that will be so bold, courageous to do that, so that they can drive the Nigerian economy in the short term and improve the Nigerian economy in the long term? For me, very optimistic over 2023, especially when we have a peaceful election and any of these three candidates find their way into power.
Interesting stuff there. I must thank you so much for your time. It's been so interesting talking to you. I've been speaking to Mukhtar Mohammed. He's one of the friends of the house, letting us understand what is happening, even across the globe. Do enjoy your weekend. We'll keep talking.
Thank you, Tolulope. Have a pleasant weekend and good. Well done. You make economics so sweet. You make things easy when you interview, because you also have a deep knowledge about how the economics are working all over the world.
Thank you so much.
Thank you so much. Always a pleasure being on your program.
I am humbled. Thank you so much.